Hey guys, Kyle here with the Mortgage Celebrities Studio. Today, we're going to be talking a little bit about first-time homebuyer playbook, everything you need to know about buying your first home. And a lot of these things could be used for people who have bought two, three, four homes. So it's just things you want to remember, but specifically for first-time homebuyers. And I have none other than Will Beauseigneur here from Nittany Mortgage, who's going to help me kind of break this down. So, Will, thanks for being here today, and we'll kind of jump right into it. I brought you in because you do have a large clientele of first-time home buyers. What's kind of the first thing that you get into with them?
Yeah, absolutely. So first and foremost, thanks for having me, Kyle. Always a pleasure getting to hang out with you and talk shop. So like you said, first thing is, in my experience, the biggest advantage we have, especially with first-time home buyers, is time and preparation. So preparation is always key when it comes to buying a home. But first and foremost, especially with those first-time home buyers, is doing some of that preparation and legwork ahead of time can pay dividends in the future, as far as being able to make competitive offers and getting that perfect home whenever the time comes, and capitalizing on these opportunities.
Yeah, and it's funny because when we deal with people who have bought and sold many homes, you always find that they always come to you last minute. They've already found their house, right?
Mm-hmm.
But one of the things that I found that first time home buyers do is they do reach out early and often because they don't know a lot and they're afraid to kind of wait to the last minute. I mean, there is always the exception to that rule, but people who have bought and sold many homes should probably get pre-approved or talk to a loan officer well before they reach out. And then first time home buyers, I feel in my clientele, they do reach out early and often, which is good because time
Mm-hmm.
is on your side, but you do want to reach out to a mortgage professional to get things in line before you ever go shopping.
For sure. There's a number of factors that go into play when it comes to getting approved for a mortgage, and we want to make sure we're covering all of those topics well in advance of the time that that buyer is actually going under contract. That way, any hidden roadblocks or speed bumps that we may run into, we would much rather discover those earlier on in the process. That way, we're prepared for it, and it's not a surprise halfway through the mortgage process or at the last minute before closing.
Yeah. And I mean, one of those big topics that I always get like one of the first questions is how much money do I have to spend out of pocket?
Mm-hmm.
How much is the down payment? How much is the closing cost? And in fact, most of the people that I talk to, they just say the word down payment thinking that that's the only thing that they owe.
Mm-hmm.
They lump the closing costs in with that term. So, in your experience, what are you telling your clients about down payment, closing costs?
Absolutely. So there's no magic bullet when it comes to finding out what that exact dollar amount is, because there are so many factors that come into play. However, what we do here at Nittany is when we're pre-approving a client, we'll give them what's called a fee sheet. That fee sheet breaks down any and all costs that will be associated with that buyer and does it line by line for their closing costs, their down payment, their escrow reserves, any sort of realtor commissions or fees that they may have to pay. We do our best to give a fair and accurate number based on that client situation. And there's a lot of give and take with that too. We have a number of different products that we can offer. So it's having conversations with those buyers that help us unlock the keys to figuring out which option is going to work best for them and how we can fine tune some of those numbers to make sure we're meeting their financial needs and giving them that level of comfort when it comes to buying that home.
Yeah, and I think a lot of people have a misconception that buying your first home is somehow going to be cheaper or free in some cases. I have these conversations where they're like, "Well, we want to use a first-time home buyer program," and there's really
Mm-hmm.
no blanket first-time home buyer program, but there is down payment assistance grants and down payment assistance programs that are available. So one of the first questions that I ask is, how much are you comfortable spending out of pocket and where is that
Mm-hmm.
money coming from? So then I can figure out, do we need to look at one of these grants or down payment assistance programs? And there's a lot out there, but there's not just one that fits all. You know what I mean?
That's right. And every client, it brings their own unique situation to the table. So it's up to us as experienced loan officers to make sure that we're finding that right product and unlocking any possibilities that we may have for getting someone approved and getting them maybe some assistance if they need it.
Yeah, and that's also the importance of working with someone who's local, because a lot of these programs, these assistance programs, they're based out of a township or a county or sometimes even the state. There are
Mm-hmm.
national programs, but some of the better ones are the local ones. So working with someone who is local in the neighborhood, such as yourself in State College and myself in the Lehigh Valley, we know the ones that are around. But a lot of people don't know that you're able to use what's called gift funds from friends or family. So do you want to touch on that?
Yeah, absolutely. So, like you said, gift funds, it's a pretty simple concept, but can be a little bit daunting at first without proper guidance. So, gift funds are simply someone, preferably in your close family, that's giving you money that and is contributing to either your down payment, your closing costs, or a combination of both. There are certain limitations as far as who can be considered the giver of that gift. Your mechanic can't be that person that gives you a gift. Preferably, it's going to be a parent, a grandparent, a sibling, maybe a close aunt or uncle, someone in that, again, familial tie that is able to help you with that cash to close, which is the combination of your down payment and closing costs that can really unlock a lot of potential for a first time home buyer.
Yeah, and there is a way to document how that gift is given. So,
Mm-hmm.
going back to when we first started this conversation, time is on our side. Getting this started early, having these conversations early, make sure that we don't, have these hiccups later on down the road when, you've been given the money, but somehow it wasn't transferred to you correctly or out of the wrong account or wasn't documented correctly. And then all of a sudden we find ourselves in a predicament where we can't necessarily use those funds. So that's what we don't want to happen.
Right.
Um,
Absolutely. Nothing worse than a bad surprise halfway through the process, right?
correct. And that goes with making sure that you have put the proper people in the proper place. And what I mean by that is when you're buying a house at any point in time in your life, it's important to surround yourself with the right people, the right loan officer, the right real estate agent, the right title company. So what do you give, like when you're speaking with first time home buyers, what kind of advice do you give when it comes to that?
So a lot of times whenever I'm dealing with a buyer, they may have already been, associated with a real estate agent that has referred that business to me. However, again, building out your team is so key when it comes to being a competitive buyer and making sure that you're getting into the right house at the right price at the right time. So like you said, we've got realtors, we've got insurance agents, we've got title companies, we've got loan officers. There are a lot of people that are involved in this process, and buyers are interacting with every single one of them throughout that process. So it's important to make sure that you've got someone that you're comfortable with, that has your best interests in mind, and that's going to be able to seal the deal and potentially, overcome some of the hurdles that we sometimes see during the process. So building out that trusted team of advisors is paramount when it comes to making sure that you're going to be a successful buyer.
Yeah, and you can't be afraid to, for lack of a better term, fire somebody.
Mm-hmm.
I've dealt with people in the past where, you've seen it before too. You get a phone call and it's somebody kicking the tires, seeing if they're interested in using your services to get a mortgage. And you ask why they called you, and they say, well, I didn't really love the experience I had with our current bank or our current loan officer or our current lender. So I was just kind of seeing what else was out there. And
Mm-hmm.
part of my speech to them is just, whether it's me or somebody else, the biggest thing you can do for yourself is find somebody that you trust. And that feeling in your gut, right? You don't have to ask them 100 questions. You can kind of get that feeling, whether it's the real estate agent showing you the house, whether it's the insurance agent helping you get homeowners insurance, whether it's the home inspector. If you feel like they're just mailing it in, that's not the person that you want helping you buy a 300, 200,000, $500,000 asset. You want somebody who's going to be on your side, who picks up your phone calls when you need them, who, answers your questions when they know the answers, but not afraid to tell you, hey, I don't know the answer to that question, but I'm going to find out for you.
Yeah, absolutely. As much as we'd like to think that we know everything, we certainly don't. But again, being able to find the answers for a question that you may not be 100% certain of, or again, just having that level of openness and honesty with a client, I think really goes a long way in building that level of trust and rapport that they feel comfortable in working with you, because home buyers are in a pretty vulnerable position whenever they're going through that purchase, especially for a first timer, where they're putting a lot out there, they're spending a lot of their hard-earned money, they're making perhaps one of the biggest financial investments of their entire life, and they're putting a lot of trust into the people that they're surrounding themselves with. So making sure that they've got that trusted team of advisors goes a really long way when it comes to buying a home.
Yeah, and I would even challenge some people that, a lot of times when, you have people come to you, it's because of word of mouth or referrals. My aunt used this person to help them get a mortgage, or, my brother used this person to help them buy a house. Even if you're getting a referral from your most trusted family member, that may not be the person for you. So, not saying that, you should go along with what your trusted family members say, but also do your due diligence and make sure that you're covering your own, self, because you don't want to put yourself in a position where it's going to screw you later on down the road. But um, it, moving forward, is there anything else, Will, that we should talk about when it comes to first-time home buyers? I know we touched on building your team, getting started early. What else should we be telling our first-time home buyers?
This doesn't happen with everyone, but we do occasionally, and more often than you might think, is run into someone that maybe has some skeletons in their closet as far as their credit report's concerned. So, nobody's perfect. Even if you haven't ever missed a payment on anything, you may not have a perfect credit score. And someone like a loan officer is going to be able to give you some tips or tricks as far as how you might be able to improve your score to maximize your buying potential, get you that best interest rate. So, we've seen it all, Kyle. You and I have worked with hundreds of clients, and we've seen a lot of credit reports, and we've seen some of the best of the best and the worst of the worst, and a lot in between. And again, every client that we work with is slightly different. They're bringing different, strengths or weaknesses to the table, and it's up to us to be able to help them uncover those and maximize their potential. So little things like maybe paying down a certain credit card balance, or finally paying off that $75 medical bill that's been on your record for the last 3 years. I think everyone can relate to this. Sometimes we think if we ignore a problem for long enough, it'll just disappear. And that's, of course, not always the case, especially when it comes to your credit report. And sometimes just those tiniest little things can make a huge impact as far as your buying power or what kind of interest rate you're going to be getting from a lender. So allowing us to uncover some of those earlier on in the process can help us maximize the ability to boost those credit scores and get you those really low interest rates.
Yeah, I mean, kind of a peel back of the curtain that most people probably don't know is, I mean, you probably think about it, better credit scores get you better interest rates. But,
Mm-hmm.
some people will ask, why am I not getting the best? Or I'm seeing this other interest rate out here and they have a 740 credit score. There are tiers. 780 gets you a credit, an interest rate. 760 and above gets you a certain rate. 740 and above, 720, and so on down the list. So
Mm-hmm.
if you're a 739, you're getting a different interest rate than somebody who has a 740. It's just the truth of the matter. So why not call somebody early like you, like me, who can tell you, hey, here's the thing you can do to get your score up 1 point to get yourself that much better of an interest rate. And a lot of times people don't even know their actual credit score. And maybe you
Mm-hmm.
could talk about this, but how many times somebody tell you, yeah, I have a 789, and then you pull their credit and it's a 750. There's a difference between the consumer scores, what they see and what we see.
Yeah, absolutely. So there are any number of credit monitoring services that people can use. Credit Karma, whether that's through your credit card or your bank, a lot of places are offering to give you that free monthly credit score. That's a great tool for monitoring trends as far as if your score is increasing, decreasing, or flatlining, but it's not always 100% accurate as far as what we see when we pull our credit reports for a mortgage. There are a number of different models that each credit bureau uses for specific loan types, like an auto loan, credit card mortgage, you name it. There are so many different ways that your credit score is determined, that again, people don't always have the full access or the tools needed to be able to know exactly what that score is. Sometimes it's a good surprise, sometimes it's not so great of a surprise. And again, that's where people like you and me come into play, as far as being able to give our clients those tools needed to be able to help themselves.
Exactly. Yeah. And I mean, there's a lot more topics that we can touch on. We could talk about this for hours and hours. Our
Oh
time
yeah.
is drawing to a close here, but Will, I really appreciate having you on. So thank you for coming. And I think we should do this again very soon. For everyone else that's watching, please like and subscribe, comment, let us know what you want us to talk about. We can bring you all the content and all the information you need to help your next home buying experience be that much better. So, Will,
Yeah.
thank you again, and look forward to seeing you again soon.
Thanks for having me, Kyle. I appreciate it.
Yep. Take care.
You too. Thanks.